Here's why most rental properties never cash flow. Most real estate investors think rental properties won't cash flow because of interest rates, bad tenants, or the market, but that's not true. Most rentals never cash flow because of one decision that most investors make before they ever buy the property. And once you see it, you'll realize why most landlords stay stuck forever. Before an investor ever buys a rental, they make a decision that quietly determines whether the deal will work or fail. Now, they don't realize they're making it. They choose where they're willing to buy, not based on numbers, but based on comfort. They avoid neighborhoods that feel unfamiliar, and they gravitate towards neighborhoods that feel safe. And that single choice destroys cash flow before the deal even starts. And here's why that decision is so expensive. Investors confuse comfort with safety. Comfort feels like nice streets, familiar demographics, and neighborhoods you'd live in. But comfort comes at a cost. In those areas, prices rise faster than rents, taxes are higher, insurance is higher, and competition is brutal. To put it simple, the numbers simply don't work, but investors buy anyway. They tell themselves, it's okay, appreciation will make up for it. But that's exactly how cash flow disappears. And once cash flow runs thin, the mistakes start stacking. When a property barely cash flows, there's no margin for error. One vacancy wipes out months of profit. One repair creates endless amounts of stress, and one bad year forces selling or foreclosure. This is why so many landlords say real estate doesn't work anymore. The fact is, real estate works, thin deals don't. And thin deals almost always start with buying in the wrong area. But here's the part most investors don't want to hear. Because cash flow investors don't buy where they want to live. They buy where renters stay. Working class neighborhoods with stable employment, long-term renters, and realistic rent-to-price ratios. These areas aren't flashy, they're predictable. That predictability is what creates cash flow. And it's exactly what most investors avoid. And avoiding this is why most portfolios never scale. Most investors don't fail because they picked one bad deal. They fail because they keep repeating the same comfortable decision. They buy in the same type of area with the same thin margins and experience the same stress. Professional operators don't guess on location. They follow data, they follow systems, they buy where the math works, not where the emotions feel good. And that's how portfolios grow. At some point, every investor hits a fork in the road. And let's find out what type of investor you are. Do you keep guessing, keep learning the hard way, and keep buying thin deals? Or do you partner with operators, plug into proven markets, and let systems handle the execution? Cash flow investors almost always choose the second path. If you want to build rental income without having to guess on what's a good neighborhood or a bad neighborhood, or trying to figure out how to invest through making costly mistakes, that's exactly what our Boots on the Ground program was built for. My team identifies the markets, runs the deals, manages the rehabs, and we even handle the tenants. And all you have to do is come in as a capital partner. Click the link in the description to watch the private presentation that breaks down how it all works. Brian Grimes, your real estate mentor. I'll see you there.